One of the biggest misconceptions in home buying is that there is one best loan option. In reality, the right mortgage solely depends on the person sitting right in front of you. And today we're going to talk about how buyers should actually think through those decisions. What is going on, everybody? Welcome back to another episode of Closing the Deal. I am one of your hosts, Sam Enright, and sitting across from me is my co-host, Zach Dixon. And guys, today we are going to be talking about something that every single buyer faces when it comes to their pre-approval, when it comes to starting the home buying process, and that is what loan options best suit me, or how to make the right decision when it comes to choosing a loan product. So obviously we wanted to talk about this, as a lot of our content this year has been about getting started in the home buying process and all of the different things that go into that, and felt like it would be a good time to talk about how to go about making the right decisions when it comes to your mortgage, and the perfect, or not perfect, but the right option for you. So Zach, how you feeling today?
Doing fantastic this morning. Honestly, this is a great episode for us because, again, we've been hammering home, doing the prep work here in 2026 before getting started. And honestly, obviously it kind of goes into the pre-approval process a little bit. But just having the prep work done and just being confident in the loan program that you're going with absolutely falls in that bucket as a whole. And I think it's just a common, maybe not misconception, but just not really, public knowledge that there are so many different options for different people as well. When you get into, VA for veterans, USDA for, all of the rural people out there. Obviously, we'll get into these things as we get into the episode, but just again, there are so many different options out there. And I think that, been hammering home the prep work, and this is one of the big items of the prep work when you get started on that home buying journey.
Yeah, for sure. I know that when a lot of people obviously start this process and, start to embark down on that journey, right? It can just feel like there's just so many options, and, different rates, different programs, different down payment amounts, all those different things, right? And so it can leave you feeling like, well, what makes the most sense for me? And, I think that takes us into our first thing here, which is, how people get overwhelmed, or why they get overwhelmed. And it's very easy, right? We've sat down with clients before, and yes, sometimes you're going to have clients that maybe fit into a singular bucket, just depending on whatever, their goals are, or, credit score, or down payment, or these different things, right? Each loan guideline has, or each loan program has their own sets of guidelines. And so you have to, meet that criteria in order to be eligible for them. And so we have to try to navigate around that, figure out which, option is going to be best for the client, as well as, obviously talking with them and making sure that they, feel comfortable with that. So, I know that, when people probably get pre-approved or they start, they're probably thinking there's just going to be a single answer. But, unfortunately that's, we would be doing a disservice to the client if we didn't, obviously offer them up the different options, right? And talk about those different things that they could be eligible for and which one makes the most sense for them. And, it's not that we're trying to complicate things, it's ultimately that different loans and the way that we structure those solve different problems for each person, right? So, if you need a no down payment sort of loan, that's going to look a little bit different than somebody who maybe has 10% or 15 or 20% down, right? We might be looking at a different type of loan program or down payment assistance, those different things that go along with that. And so, again, our job is to ultimately try to take some of that overwhelmingness away by discussing the options, and going through them and letting hey, this is what this looks like. Here's, how this would work for you, that sort of thing. But I can definitely see how that would be something that would feel just like a lot in the beginning, right?
Yeah, I agree with that 100% because, again, some of the words and terms that are thrown out when you're a first time home buyer, you may not really understand what those are. It may sound like a foreign language, honestly, to you. And so you have all of these options in front of you. You have all of the different, guidelines and things that go along with these options. And I can understand absolutely why that may feel overwhelming. But again, like you said, you want to make sure that you as the home buyer are getting the best deal for you possible, not necessarily for the seller or for another buyer that is out there working, looking for a home. You want the best deal for you. And so if that means, again, like getting a zero down program, finding those options for you, finding homes that fit that necessity is what's going to be best for you. And so ultimately, yes, I can understand why it may feel a little bit overwhelming, but again, it is solely based on doing the best for you as the buyer.
For sure. And when we look at, ultimately, right, what these different loan options, what you're trying to do is find the balancing act between them. Usually they're going to be balancing like three things, right? So we're going to be looking at monthly payment. We're going to be looking at cash needed up front. And then you're also going to be looking at the long-term cost of the loan, right? So finding a balance between those things is highly important. So just to give you guys a little bit of an example, right, when we're talking about this. So, monthly payment, cash need up front, long-term cost. So the easiest way to think about it would be ultimately, right, if you're buying, let's just say a $200,000 house and you are going on a zero down USDA loan, you are going to be borrowing the entire cost of that house in order to finance it, right? And so you are likely in that moment going to have a higher cost over the life of the loan than someone who says put 20% down on that house, right? They're going to be borrowing a lesser amount and they're going to pay back a lesser amount over that same timeline. But on the flip side, obviously, they are going to have to come up with more cash in order to make that loan work, whereas you are going to be able to get that loan for, again, on a USDA zero down, zero 0% down payment, right? So it's finding that balancing act of, again, what is your goals, where do things currently stand for you, and the different loan options obviously kind of balance the structure between all of those. So it really is just more about formulating the perfect, not the perfect, I keep using the word perfect, but the right scenario for you. Because everybody has different goals, everybody's in a different situation, and it's not a one size fits all. And they obviously have gotten very good in recent years at offering different types of programs that give people access to different things. Obviously, we've seen a huge influx in like down payment assistance programs. Obviously, USDA, the 0% down, and then you have FHA, conventional, for first time home buyers, they have low down payment amounts, 3% for conventional, 3.5% for FHA. So you can get in the door at these smaller amounts, or you could, potentially go higher. It all just certainly depends on where you're at and what your goals are.
Yeah, great points there. And honestly, I think that takes us into the next section, next segment of the episode. And is really what the real question the buyer should ask. And a lot of times, buyers are going to ask, what is the best loan possible? And that's kind of a loaded question because, again, it really, really just depends on the situation at hand for you as the buyer. So I think kind of reframing the question, it should be, what loan fits the situation that I'm in right now? How does this loan help me with my goals of being a homeowner? How does this loan fit into the things that I want to achieve and be able to accomplish as a homeowner? And so I think, again, all of those things really just depend on you as the buyer, how much savings you have, how much you're ready to put down on the property, how much you are wanting to, pay on your monthly payment, how much in interest you are looking to pay over the life of the loan as well. And so I think that is just a very, very common question that buyers come to, lenders specifically, when they get started on that home buying journey. Like, what loan is the best? Well, that is a loaded question. One loan that is best for you is not going to be best for another buyer. And if you're a veteran, you can qualify for a VA loan that somebody that is a non-veteran cannot. And so obviously that would be a good example for you as a buyer. If you're able to qualify for that, that's a option that's available for you that's not available for everybody else, and that can provide something that may fit into your goals and align with your goals a little bit better. So I think it's just a little bit of a reframe when you get started there on how do we find the best loan program for you as the buyer specifically versus what is the best program out there, because there are a lot of good programs, and just kind of have to figure out what fits you the best.
Yeah, for sure. Um, I mean, just to kind of give you guys a little bit of an insight into, I guess, how we would normally structure these sort of things, right? So, when we always have these introduction phone calls with clients and, they come to us, maybe they filled out a loan application, we're always going to, start asking different questions, because I think how you start to structure a loan is based on a couple of key factors, right? So you're going to look at, maybe a savings pattern, or whether or not there's money that is, that they have for a down payment. That's one of the, obviously kind of the first questions that, gets asked when trying to structure a loan, because that's one of the biggest key points there is, if we don't have a lot of money saved for down payment, then we obviously know we're maybe going to fit into a USDA zero down bucket, or we're going to be looking into an FHA with a low down payment amount, or even, stacking on a down payment assistance program with that to help take care of the down payment, right? And then you have other clients who come and they're like, hey, I got, we've had a couple of clients here recently. Hey, I got money stacked away in an investment account. I want to, withdraw those funds and put them towards this, towards this house. How can we best formulate that? And then we also look at, okay, well, what's the best way to structure it with the funds that you do have? Do we use up all of the funds? Do we use a part of them, right? What is going to be the best situation for you when it comes to loan amount? What impacts is that going to have on your interest rate? All these different things, right? And so that's ultimately where our job as a lender comes in, to discuss these things and make sure that we're giving you the options and discussing these different things with you. Another thing is going to be income stability. What does your income look like? What are your debt to income ratios look like? How many liabilities do you have every month? Each loan program is different. USDA has not a very low, but they have the lowest debt to income threshold of all of the loan programs, whereas FHA has the highest debt to income ratio threshold of all the loan programs. So if we're in a situation, I think I've used this example in the past, but if we're in a situation where maybe we're only qualifying one buyer and he's married and his wife works, and we're not using her income on the application, maybe in that situation we would feel like, hey, we're able to get a little bit more aggressive on the debt to income ratio, because we know there's income on the back end that's being earned in the household that's not necessarily being looked at on this loan application. And hey, we're trying to qualify for this amount, so maybe we would look at a program that has a higher debt to income ratio threshold in order to be able to give you a better chance at, maximizing that budget, right? And then the other thing is long-term plans. So, if somebody comes to us and, they know that, hey, this is going to be a house that I'm going to live in for a very, very long time. I don't plan on moving. This is our forever home. Normally people in that situation are going to be a little bit more, cognizant of, a larger down payment, of interest rates, of all these different things, right? Because they know they're going to be there for a large period of time. And they want to make sure that, when you're sitting in a house for 15, 20 years, the amount of interest and things that you will pay over that time is crazy, right? Versus somebody who's like, hey, this is just my starter home. I'm thinking maybe 3 to 4 years I'm going to be here, and then, potentially rent it out or potentially sell and move on to the next thing. Those sort of things, when you're looking at it over that small of a time scale, right? Those larger implications of interest and those things paid over time, or down payment, all that stuff paid over time, I feel like has less of an impact if you're only going to be in the property for a few years versus somebody who's going to live there for 20, 25 years, right? It's much different over that course of time. And so, helping to navigate those waters for people, and, providing some insight into that and how to best structure it based on, again, what your personal goals are. So just a little bit of I guess a little bit of an insight there to, how that works, how those conversations start to develop, how they start to happen, and what we kind of look for, when starting to structure loans for people.
Yeah, great points for sure. And I think that it goes back to again another thing that we have been hammering home, and it is open lines of communication. Having those open, conversations at the very beginning, being upfront about the situation as a whole, and making sure that everybody is really on the same page moving forward. That is going to land you into the best situation, best loan program for you. If you as a buyer are kind of withholding information, it's not gonna enable a professional to be able to help you to the best of their ability. And so I think it just kind of goes back to, again, the open lines of communication. You want to make sure that we are communicating all of these things, and so your professional can work for you the best that they possibly can.
Yeah, for sure. I mean, I have a perfect example of this. Actually, we have a client who's pre-approved. She is selling a house, and she's expecting some proceeds back from that. And she has different goals when it comes to personal finances, when it comes to her next house, and all these different things, right? And so we've been having, I probably talked to her a couple times in the last week or so, just having those open, ended conversations about, hey, here's what my goals are. This is what I want to retain out of my proceeds for my own personal, whether that's to invest, whether that's to have, an emergency fund, this sort of thing. And here's where I want to be at goal wise for the house I want to purchase. How can we best structure these numbers? What is the amount that I need to put down to best give myself the opportunity to have this payment? And really maximize, where I'm at. And so, that's another thing that, that I'm a big proponent of, that taking the time to truly understand where someone is at, where they're wanting to go, and how we can best help facilitate that process for them, right? And obviously getting their other professionals involved if need be as well. Like I had a conversation with her. She has a financial planner. I said, hey, I would go talk with your financial planner, see what you're saying, that you have these goals. Where do you need to be on the back end in order to reach these goals, right? From a financial standpoint on the back end, for retirement, for all these different things. And so, using that situation to obviously provide as much clarity as possible so that we can get down to the nitty gritty of, hey, this is what we need to do. Here's how we need to structure it. Here's kind of your loan options. And here's what I think would make the most sense based on what you're telling me your goals are. And obviously giving her that information so that she can feel confident, when going out and purchasing or making offers on homes.
Yeah, absolutely. And those are the things that wouldn't happen, if you don't have those conversations. If this prospective client would just be, listing the house and going about the business and going to buy the next house without having those real conversations with their professionals, you wouldn't be really able to accomplish the goals how she would like to. And so I think it again just goes back to, having the conversation is going to be significantly more beneficial for you than if you don't have that conversation.
For sure. Yeah. And I mean, it's a super important part of the process, and why it matters to ultimately get started on that. First and foremost, it's part of, if you guys remember, we talked about in our 90-day plan episode, sitting down and even just taking a look at your own personal budget and taking a look at where things are at and where you want them to be, and what you can afford. That's obviously going to help largely in a loan structure as well. Is, hey, I don't want my payment to go above, $1,600 a month all in. Okay, perfect. That obviously creates a point where I can start to work on, okay, here's, an option for FHA at that 1,600 price point. Here's an option for conventional at that 1,600 price point. Here's an option for USDA at that $1,600 price point, right? And giving you that insight into, okay, here's your buying power with each of these loan programs based on this payment that you want. And so, again, it's going to be largely important for you to do this and have these conversations. And, it's why we've been hammering home on all these different things, because ultimately I can only structure a loan as good as the understanding of the situation that you're in, right? I mean, I could take somebody who doesn't say anything and I could present them with all different types of loan options, but whether or not that works for them, I don't know. You know what I mean? So you have to, you have to have at least a general idea of where you're driving and where you want to go so that somebody else can help you get there faster, better, whatever the case may be.
Absolutely, brother. Absolutely. And just from a real estate agent perspective, why it really matters on, figuring these things out and determining what loan program works the very best for you as the buyer before you get started shopping is because it creates, stronger offers and, obviously more confident decisions. That's something we've hammered home here in 2026 is being confident in your decisions, but ultimately, some of these loan programs from a real estate agent perspective and from a seller's perspective, for can influence a decision based on a seller. And so having that information, up front and knowing that we're steadfast in this specific loan program can help create stronger offers as a whole. As the entirety of the offer, not necessarily just the price or the loan program itself. If we're in a specific loan program and, or a specific price, we know that we can go a little bit higher. It can, we can change the terms around a little bit elsewhere. We can kind of construct an offer, based on all of the other terms in the offer that make it a little bit more advantageous for the seller and make it more acceptable for the seller, depending on, some of the things that are going into the offer itself. And so I think just as a whole, having that information and being really steadfast in your decisions and what loan program you're going with, being very confident in that can help your professionals, especially your real estate agent, when you get started writing offers to help you secure the home that you want and get your offer accepted a little bit faster.
Yeah. So, I mean, guys, really just obviously choosing a mortgage is it's not about finding, I know I've said it, I apologize, but it's not about finding the perfect loan or the perfect situation. It's obviously about more so finding the right balance for you personally, where you're at in that moment. We've talked with clients, obviously everybody knows we're in a higher interest rate market. We have been for several years. And so that obviously changes things when it comes to that as well. But I do believe that at some point we are going to see a retracement of these interest rates. They're going to come back down. And so, inside of that, just because that loan again, it may not be perfect, right? But it might find the right balance right now. And then obviously, if rates come down or if your home appreciates in value, it presents options to restructure things down the road if need be. We could do rate and term refinances where you reduce your interest rate or maybe even reduce your term so that you're paying your loan off faster. If you decided, hey, I want to stay here for longer, I want this loan to be gone sooner. We're talking with a client right now that we closed a couple of years ago that is looking at a 15-year option, to change, to pay less interest, obviously, start that loan term and cut a few years off of the mortgage, right? So it's just, again, it's not about finding that perfect solution right now. It's really just about finding the perfect balance of where you're at. And then obviously we all know that in life, normally natural progression happens, whether you end up getting a raise or switching jobs, making more money, whether your home, appreciates in value, whether interest rates come down and you're able to get yourself in a position where maybe you can refinance into a lower interest rate, right? These things, they ebb and flow. And so, obviously we do the best that we can to help people find the right balance for them in that moment. And then obviously we revisit down the road, whether that's 2 years, 3 years, 5 years. If there is an opportunity for it to better fit your life, then we'll look into what those options would look like and how we can help facilitate that at that point in time as well. So don't feel like, I know we always talk about, or a lot of people get hung up on 30-year loan, 30-year term, all these different things, right? The natural the national average, like the stats are like most people are going to sell or refinance in the first 5 to 7 years of owning their home, right? So it don't necessarily get all the way hung up on 30 years. Very rarely do people get a 30-year loan and stay there for the entirety of the 30 years and never change that loan product whatsoever. You know what I mean? At some point, most people are either going to refinance or do something in that 30-year portion of their life. And when it makes more sense for that balancing act to maybe fit where their life is at then.
Yeah, that was a great reframe there, Sam, honestly, because again, you just have to make sure we've beat the dead horse as much as we have in this episode. But again, finding the right loan is for you as the buyer, not as just a whole general statement. You want to make sure, again, that you're finding the correct loan for you as the buyer, because again, so many options out there, and you will never know about all of the options as well until you have those conversations with the lender and have those, be upfront and be honest about your goals and your savings, all of the above. You're not going to really know about all of the options available to you until you do have that conversation. And so, again, just want to make sure people are having that correct, mindset when you go to have that conversation, that we have there is a correct option for you as the buyer. You just have to find it.
Yeah, for sure. I mean, we didn't even get into we really just touched base on, obviously, the traditional loan programs. We didn't even touch base on anything, in regards to non-QM or, some of these more flexible options when it comes to income types and those sort of things. And maybe it would be a good episode in the future to obviously kind of dive into that, because I know some people, especially, today's day and age, people that own businesses or do different things, are going to fit in different buckets that maybe don't necessarily qualify them for a traditional mortgage. So, but not to make this episode about that, but ultimately, yeah, that's, just where we wanted to leave you guys off with is, it is important, to understand your loan options, and, it is not going to be a one size fits all, and getting yourself linked up with the proper, professional to help you kind of navigate those waters is extremely important. And obviously, your, being open and honest through that of what your goals are, just, I guess, be open and honest, right? Because it makes it a lot easier to help facilitate that and help you reach your goals when we're all on the same page and know what we're ultimately trying to accomplish at the end of this. So, yeah, that's all I got for you guys today. So I appreciate you guys. And Zach, you got anything else?
Not at all. Hopefully you guys found some value from today's episode. Again, we are dropping episodes every Friday afternoon, 12 p.m. So feel free, again, to check us out on all podcast platforms, Apple Podcasts, Spotify. I got the video form on YouTube as well. And also have 3 reels coming each week, Tuesday, Thursday, Friday, showcasing what we have going on in the episode on all of our platforms, Instagram, Facebook, and as well on YouTube. So again, feel free to share this episode with somebody you may feel that will benefit from this or is getting started on their home buying journey. And again, hopefully you guys found some value and enjoyed today's episode.